Warning sign for global economies. China's deflation fears refuse to fade. Imagine a scenario where the world's second-largest economy is struggling to keep prices from falling. Welcome to China's reality. The latest economic data from China has left experts on high alert, as the country's factory gate prices plummeted more than anticipated in July, while consumer prices stagnated. But here's where it gets concerning. This isn't just a China problem. It has far-reaching implications for the global economy. The numbers don't lie. Consumer Price Index, CPI, flat year-over-year, YY, yet surprisingly up 0.4% month-over-month, beating forecasts of a 0.1% decline. The core CPI, excluding food and energy, saw its highest increase in 17 months at 0.8% YY, driven by non-food items. However, food prices took a hit, falling 1.6%. Producer Price Index PPI dropped a staggering 3.6% year-by-year, matching June's near two-year low and missing the mark on forecasts for a 3.3% decline. This marks the 25th consecutive month of PPI contraction, a clear indicator of persistent price competition and overcapacity in key sectors. On a monthly basis, PPI fell 0.2%, a slight improvement from June's 0.4% drop. The underlying causes: weak demand and a housing slump. Weak domestic demand continues to weigh heavily on the economy, signaling that China's efforts to stimulate growth may not be yielding the desired results just yet. Housing market slump shows no immediate signs of recovery, further dampening economic prospects. Trade uncertainty. The fragile state of U.S.-China trade relations adds another layer of complexity, impacting investor confidence and spending. And this is the part most people miss. Extreme weather conditions, including severe heat waves and heavy rains, have compounded the economic challenges. While some analysts hint at potential easing of deflationary pressures, others sound a cautionary note. Without robust demand-side stimulus, any recovery might be short-lived. The big question: can China's economy overcome these headwinds? Prolonged housing slump. How long can the economy sustain the pressure? A big fragile U.S. trade ties. Will negotiations yield a breakthrough, or will tensions escalate further? Weak labor market. What strategies can be employed to boost employment rates? We want to hear from you. Do you think China's economic woes are a sign of broader global economic instability? Share your thoughts on whether demand-side stimulus alone can mitigate deflation fears in the comments below.